Assalamualaikum and good afternoon, sir. We are from Group C and today we will present about riba versus profit in financing. My name is Afrina and my matrix number is 284456.
Hi and Assalamualaikum. My name is ELYANA NADIRA and my matrix number is 295403. I want to talk about the background and the meaning of our Sharia, which is called riba. In Islamic banking, riba refers to the charged interest, or we can understand that riba is charging of excessively high interest rates. Besides, riba can also refer to an unwarranted increase in borrowing or lending. Riba enrich the wealthy while impoverishing the poor is the primary justification for its prohibition. For example, we can say that zakat is opposite of the interest, which means interest take money from poor, give it to riches, while zakat transfer from rich, give it to poor. In Islam, it is considered improper for parties to deal unequally with one another. Moreover, there are various methods for circumventing riba restrictions, such as one of these products is the use of a pledge ar-rahnu, as use of real estate to secure the repayment of the loan. Another Sharia in Islam is profit sharing. Profit sharing means give employees direct or indirect compensation based on the company's profitability in addition to their regular salaries and bonuses. Other than that, employers also frequently prefer profit sharing plan to wage increase or cost of living adjustment, since the profit sharing distribution are provided only if the profit earned, which implies the company more able to pay the distributions. The next part, I want to talk about the modus operandi, or the mechanism used of the riba and profit sharing. Riba and profit sharing are two different concepts used in Islamic finance, but they involve same mechanism and have distinct operandi. As we know, Islamic law forbids interest-based transaction in all forms of commerce but permits the continuation of profit sharing schemes. This means that Islamic banking practices must take this teaching into consideration in both form and content, such as mudarabah and musyarakah. But we must know, since the riba is forbidden in Islam, they frequently refrain from taking out loan from our institution. To ensure that all financial activities are compliant with Sharia, Islamic finance industry has employed Sharia governance. Furthermore, musyarakah mutanakisah, which is MM, have flexible financing option that lets them tailor the condition of the loan. For example, the buyer must create musyarakah or mudarabah deposit account. After then, the buyer can apply to the bank for MM contract, home financing loan once they have saved the necessary amount of money. Musyarakah mutanakisah contract, which is home buyers, have a flexible financing option that lets them tailor the condition of the loan to suit their needs. The bank will also decide on the profit sharing arrangement between the buyer and the bank. Last but not least, mudarabah also in the context of buying a house involve a specific modus operandi. The process initiates with arrangement between the Arab ulama and mudarib outlining the terms and condition of the mudarabah arrangement. Besides, mudarib and the Rab ulama share in the ownership and potential profit in the real estate. So overall, the MM contract and mudarabah provides a Sharia compliant financing alternative for house purchases.
Riba and profit in Malaysian finance conflict, hence the compatibility and acceptability of riba-based financial activities under Islamic principles and Sharia law is a major issue. In Islamic finance, riba means loan interest, which is banned. Malaysia has a substantial Muslim population, making it challenging for the government to integrate Islamic banking with the interest-based financial system. The issue is that many conventional Malaysian financial institutions function on interest, which contradicts Islamic banking. This makes it difficult for persons and businesses who follow Islamic ideals to get financial services that match their belief. Such individuals and businesses may have trouble obtaining non-riba finance. Having conventional banking based on riba and Sharia compliant financing poses questions about maintaining equitable access to financial services for all Malaysians. Although Islamic banking has grown in Malaysia, conventional money still dominates finance. As a result, Sharia compliant financial solutions may be less accessible to individuals and businesses. A level playing field between the two systems is another issue. Traditional banks have a competitive advantage over Islamic banks due to their infrastructure, networks, and experience. This may cause a financial sector imbalance which might slow Islamic finance growth in Malaysia. Profit-based financing often involves more risk sharing and a more intricate structure than interest-based loans. This may increase financing expenses for profit-based agreements, which may include fees and profit-sharing ratios. The loan may be less cost-effective for certain borrowers, especially those who would have gotten lower interest rates under conventional financing. To compound matters, profit-based financing requires a thorough evaluation of the firm or project's profitability and hazards. Due to assessing profit possibilities, market conditions, and party capabilities, this evaluation procedure may be more sophisticated and time-consuming than conventional finance. The lack of common risk assessment frameworks may complicate this process. The dispute on riba versus profit in Malaysian finance centers on whether riba-based financial operations are Islamic. Combining conventional interest-based finance with Sharia-compliant financing creates challenges for leveling the playing field and delivering fair financial services. Malaysia has promoted Islamic finance, but to solve these issues, deserved stakeholders must work together and collaborate to make the financial system more inclusive and equitable.
So I'll be presenting the next part, which is the solutions to the issues in Islamic banking. So the coexistence of conventional banking rooted in riba and Sharia compliant finance in Malaysia has presented challenges in ensuring equal access to financial services for all Malaysians. Despite significant growth in Islamic banking, conventional financing remains dominant, creating a dilemma for individuals and businesses seeking Sharia compliant solutions. However, the very principles of Islamic finance offer a potential solution to address the issue, fostering inclusivity and equitability access for a more harmonized financial landscape. One key advantage of Islamic finance lies in its emphasis on ethical principles and inclusivity. The prohibitions of riba in Islamic finance coincides with many people's ethical concerns, making it an appealing alternative for those looking for Sharia-compliant financial solutions. By accentuating ethical practices and encouraging risk sharing, Islamic finance essentially aims to establish a financial system that caters to a varied population, ensuring that everyone, regardless of their religious beliefs, has access to ethical and Sharia-compliant financial services. Furthermore, Islamic finance also promotes the concept of Qard al-Hasan, which translates to benevolent loans. This concept allows Islamic financial institutions to provide interest-free loans for individuals facing financial challenges. Islamic financial institutions could serve a critical role in resolving the financial needs of underprivileged communities by incorporating Qard al-Hasan into their operations. Undeserved populations who are frequently overlooked by conventional financial institutions owing to economic disparities could benefit greatly from interest-free loans. Zakat al-Hasan not only meets urgent financial needs but also encourages individuals to overcome financial issues without the added weight of interest payments. This helps to break the debt cycle that is frequently linked to conventional lending practices, allowing borrowers to resolve their financial struggles with dignity. This strategy promotes a more equitable financial environment by guaranteeing that all Malaysians, regardless of economic level, have access to interest-free financial assistance. Another advantage of Islamic finance principles is the promotion of financial inclusivity. In this sense, the principles of zakat and takaful are crucial. Zakat, a required form of philanthropy, may be strategically used to promote microfinance initiatives and small companies, therefore addressing the financial needs of underprivileged communities. By channeling zakat funds into microfinance initiatives and supporting small businesses, Islamic financial institutions contribute directly to poverty alleviations and economic empowerment. Takaful and Islamic methods of insurance highlighting shared responsibility and risk sharing provides an option for affordable financial security, ensuring that persons with religious or ethical concerns have access to insurance services. These Islamic ideals contribute to a more equitable financial system, fostering financial inclusion for all Malaysians. Besides, the Islamic financial system has specific advantages that can effectively address the challenge of maintaining a fair playing field between conventional and Islamic financial institutions. One key advantage lies in the principle of justice and equality inherent in Islamic finance. Sharia-compliant transactions are intended to be fair and transparent, prohibiting exploitative practices and ensuring equal outcomes. This is evident in the Islamic financial system, which promotes economic fairness by prohibiting exploitative practices like usuri, which is riba, and excessive uncertainty, which is gara. So these principles help to create a more transparent and ethical financial system. Islamic financial organizations might present themselves as defenders of fairness and integrity by emphasizing these ethical norms. This distinction may attract conscientious consumers looking for financial services that match with their ethical values, resulting in a more balanced competition between the two systems. On top of that, the Islamic concept known as mudarabah can potentially be employed to boost the competitiveness of Islamic financial institutions. Mudarabah is a profit-sharing partnership where one party provides capital and the other offers expertise as management. In the context of the financial sector, Islamic banks can form strategic partnerships with established conventional institutions, leveraging their well-established infrastructure and expertise. This collaboration can lead to knowledge exchange, technology sharing, and the pooling of resources, ensuring that both systems benefit and contribute to the overall advancements of the financial sector in Malaysia. So, for example, Mudarabah may open the way for collaborative projects such as the development of innovative financial products that combine the ethical principle of Islamic finance with the efficiency of conventional financial systems. This hybrid strategy has the potential to attract a broader spectrum of customers, supporting development and stability in the Islamic financial industry. Lastly, the Islamic concept promotes risk sharing and profit and loss sharing agreements, fostering a collaborative approach. In contrast to the conventional interest-based system, Islamic banking promotes a more equal allocation of risks and benefits. As a result of the emphasis on partnership-oriented financial transactions, Islamic financial institutions are able to actively share both the rewards and risks with their clients. This is not only adheres to justice principle but also presents Islamic banks as cooperative and engaged partners, therefore strengthening customer relationships. Islamic institutions can level the playing field and build a financial ecosystem that thrives on shared obligation by adopting collaborative responsibilities. By adopting such collaborative arrangements, Islamic banks position themselves as more than just service providers. They become vested partners in the success and challenges faced by their clients.
Assalamualaikum and hi everyone. Today I will discuss about 4 mazhab opinions regarding the issue. The 4 major mazhab are known as mazhab Hanafi, Maliki, Shafi'i and Hanbali, which are each contribute unique perspective to the discourse surrounding riba and Islamic financial practices. Firstly is mazhab Hanafi. Mazhab Hanafi adopts a pragmatic approach to financial transactions. They often permit certain transactions involving an increase in wealth, especially in trade and commerce, as long as they do not closely resemble riba. For example, they emphasize the concept of ELYANA or sale with a buyback agreement and ZAIDEN or debt trading, to structure transactions that involve an increase in wealth without violating the prohibition of riba. Secondly is Mazhab Maliki. Similar to the Mazhab Hanafi, Mazhab Maliki recognize distinction between permissible profit and forbidden riba. Mazhab Maliki tend to be more lenient, particularly in matters related to trade. Their approach emphasizes the importance of the underlying intent in transaction, permitting certain practices as long as they align with the broader objective of Islamic law. For example, by al-murabaha or deferred payment sale, where the seller discloses the cost of the item and adds an agreed upon profit margin. This allows for a legitimate profit to be earned without resulting to explicit interest-based transaction. Thirdly is Mazhab Shafi'i. Mazhab Shafi'i adopts a cautious and stricter stance on riba. They generally consider any increase in a loan beyond the principal amount as riba. However, Mazhab Shafi'i show greater flexibility in accepting profit sharing and risk sharing arrangement, fundamental elements in Islamic finance. For example, system profit sharing, mudarabah, and risk sharing, musyarakah, are financial structures where profit and losses are shared between the parties involved. Lastly is Mazhab Hanbali. Mazhab Hanbali maintain a clear prohibition against any form of increase in a loan, categorizing it as riba. They adhere closely to direct textual evidence from the Quran and Hadith and emphasize a literal interpretation of Islamic law. For instance, the Hadith narrated by Ibn Abbas, where the Prophet Muhammad SAW said, "Every loan that brings benefit is riba." Sahih al-Bukhari underscores the strict stance against any increase in loan. In conclusion, the diversity of opinions within the four mazhab contributes to a rich tapestry of thought within Islamic finance. While each mazhab brings its unique perspective, the consensus among jurists on the prohibition of riba serve as a unifying force, fostering ethical and just financial practice within the broader Islamic framework. As the landscape of Islamic finance evolves, this perspective continue to inform contemporary discussion and shape the trajectory of Sharia-compliant financial system.
Assalamualaikum. My name is Fatina binti ZAIDEN. My metric number 295266. Now we will continue with our number 6, which is how to solve or future recommendation. To solve our issue of riba versus profit in financing, first is regulatory support. One of the key factors for the growth of Islamic finance is supportive regulatory framework. Government should establish clear legal structure and framework that facilitate the establishment and operation of Islamic financial institutions. This includes creating specific legislation that recognizes and governs Islamic financial activities such as banking, insurance, and capital market transactions. The second one is education and awareness. By enhancing public knowledge and awareness of Islamic finance is essential for the further growth. Educational institutions, regulatory bodies, and financial industry stakeholders should collaborate to develop comprehensive education programs that explain the principle and benefit of Islamic finance. This education should target both Muslim and non-Muslim to foster broader acceptance and understanding of Islamic financial report. The third one is collaboration and partnership. Collaboration between Islamic financial institutions and conventional banks can contribute to the growth of Islamic finance. Conventional banks can establish dedicated Islamic banking division or collaborate with existing Islamic financial institutions to offer Sharia-compliant products and services, such Partnership will enable conventional banks to tap into the growing demand for ethical financial wealth, expanding the reach of Islamic finance. The last one is innovation and product development. By this suggestion, financial institutions should focus on developing new and diverse Sharia-compliant financial products and services. Embracing technology and digitalization will also enhance accessibility and convenience for customers, promoting broader adoption of Islamic finance. For instance, the development of Islamic digital banking platform and mobile application can provide customers with easy access to Sharia-compliant financial service. Government can support innovation in Islamic finance by providing research grants, establishing fintech sandbox, and creating regulatory framework that encourage responsible experimentation and adoption. For the last one is our conclusion. We can conclude that the issue surrounding riba versus profit in financial pose significant challenges for individuals seeking ethical and interest-free financial solutions. However, by implementing the aforementioned recommendation, these challenges can be effectively addressed and Islamic finance can flourish as a viable and inclusive alternative. Through a supportive regulatory framework, education and awareness program, collaboration and partnership between Islamic and conventional financial institutions, and continuous innovation in product development, Islamic finance can gain wider acceptance and become an integral part of global financial system. This will not only provide ethical financial options for Muslims, but also attract individuals from diverse backgrounds seeking ethical and socially responsible financial solutions. By embracing this solution, government, financial institutions, and individuals can contribute to the development of a more equitable and ethical financial system. Islamic finance offers not only ethical financial options for Muslims but also attract individuals seeking socially responsible financial solutions. This promotes economic growth and stability while upholding the principle of riba-free financing.
That's all from us. Thank you for listening to our presentation.